Welcome to GEPL Capital Talks on Tuesday, a weekly podcast, bringing to you an interesting talk related to finance every week. Stay tuned. Subscribe now and press the bell icon to GEPL Capital's YouTube channel and never miss out on any stock market update and build your knowledge on investment. Hey, hello everyone. In today's Tuesday Talks, which also happens to be our episode number 66, we are going to be a little different. In this episode, we are going to talk about Nifty 100 Low Volatility 30 Index by our research analyst mutual fund Tushar Patil. So before we start, don't forget to hit the bell icon and subscribe to our YouTube channel. We promise we will make investing easy for you. Here you go. Listen in.
Hi Lakshmi. We believe lower risk need not necessarily mean lower returns, but how? This is exactly what I am going to explain in this podcast. Now a brief about Nifty 100 Low Volatility 30 Index. This index invests in top 30 least volatile stocks of Nifty 100 index and aims to measure the performance of low volatile securities in the large market cap segment. Hence, this index can provide investors a good opportunity to invest in large cap and low volatility blue chip companies of different sectors. If we compare the index performance vis-a-vis to Nifty 50 and Nifty 100, it's clearly visible that over a period of 3 years its performance is in line with Nifty 50 and beating Nifty 100 returns. And over a period of 5, 7, 10 and 15 years basis, Nifty 100 Low Volatility 30 Index is beating both the indices with a good margin. The value of 10,000 rupees invested would have grown to rupees 21,818 over a period of 5 years, 26,569 rupees over a period of 7 years, and rupees 89,867 over a period of 15 years as compared to 58,836 for Nifty 50 and 61,952 for Nifty 100. 3-year standard deviation for Nifty 100 Low Volatility 30 Index is significantly low as compared to Nifty 50 and Nifty 100 Index. Even risk-adjusted returns measured by Sharpe ratio is better off too. For Nifty 100 Low Volatility 30 Index, it's 0.23 as compared to 0.20 for Nifty 50 and Nifty 100. Thus, Nifty 100 Low Volatility 30 Index can generate better risk-adjusted returns as compared to Nifty 50 and Nifty 100 over a period of time with lesser volatility, which is exactly what is needed in the current market situation with rich valuations and high volatility, and is a win-win situation too. Now let me give you a brief introduction about the index, eligible securities of the index, selection criteria of the securities, and about rebalancing of the securities, so that you can have in detail idea about the Nifty 100 Low Volatility 30 Index. First, about eligible universe. The securities forming part of Nifty 100 with minimum listing history of 1 year and which are available for trading in derivative segment are eligible for inclusion in the index. And DVR shares, that is differential voting right shares, are not eligible for inclusion in the index. Now selection criteria. Stocks are assessed on the basis of volatility for index inclusion, and volatility is calculated as the standard deviation of daily price returns for last 1 year. Eligible stocks are then ranked based on their volatility score, with stocks having lowest volatility getting a rank of 1. Finally, top 30 ranked stocks with least volatility form part of the index. Now about index rebalancing. The index is reviewed on quarterly basis. At the time of review, if the existing constituent of the index is ranked within top 60 based on the low volatility score, then the stock is retained in the index. Stocks based on lowest volatility gets included in the index depending on the number of exclusions from the index due to the above rule. Now let me introduce you to the top sector and stock holding of the index. Consumer goods is having exposure to the tune of 29% in the index, followed by IT 16%, financial services 14%, and power and automobile to the tune of 6.5%. Top 5 stock holding of the index includes Dabur India, Britannia Industries, Hindustan Unilever, Nestle India, and HDFC Life Insurance Company Limited. Now the question is how to invest in Nifty 100 low volatility 30 index and grab this excellent opportunity. Well, ICICI approved Nifty low volatility 30 ETF and FOF are providing solutions to this query. To invest in ETF, one should have Demat and trading account in place, and for fund of fund, there is no need of Demat account and can invest like mutual funds. ICICI Prudential Low Volatility 30 ETF and FOF aims to replicate Nifty 100 Low Volatility 30 Index by buying the same stocks in the same proportion as the index, thus try to generate similar returns as that of Nifty 100 Low Volatility 30 Index. Thank you.
Thank you so much, Tushar. So you can also follow us on Instagram, Twitter, and Telegram, for where we are talking all about investing for you. Thank you so much. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Investors must make their own investment decision based on their specific goals, financial position, and risk appetite. The content provided herewith is purely for information and educational purpose only.